Good day. Ira Epstein of Linn Associates with your financial market wrap-up for a pretty wild, you have to say that, a very, very wild Thursday, and this is the 25th of February, 2021, just getting on to 7 p.m. Central Time. So we opened lower, had a good sell-off, and we're already getting some substantial bouncing. You know, look at the Dow. You got down to 31,195. You're already over 100 points off that low. You're 60 points off the low in the NASDAQ already. I mean, you talk about volatility, you're getting it, and a lot of it. Why? Well, before I answer that question, I have something I'm asking of you, and then I'll give you everything else. I'd like you, if you're watching me on YouTube, if you like what I'm doing, hit like. If you have a comment for me, leave a comment too. They help the viewership rating that I get. Gets me more views down the road. So I put this out for you regularly. You do that. No ads today at the end of this either. Okay? If I don't see that I'm getting those likes, watch out. Okay. Laughing. You can do what you want, obviously. So as we look at the market, here's what I think is going on. The market is in a full-fledged adjustment period right now. The Adjustment Bureau, remember the movie and all that. We're in an adjustment. We're adjusting to higher interest rates, and they're going up quicker than the market thought, in large part because of the two-day testimony from Fed Chair Powell, who's not doing anything to stop it. That's not a criticism. That's a statement. There's a very big difference. The market's going to go where the market goes. The Fed picks its battles when they want to make them. A 1.5 rate on a 10-year, and the relative scheme of things, it's not so high, right? But when you were last summer at the 0.6 ratio, and there was talk, were we going to go negative, and now you're almost a full percentage point higher, it is a big deal. What else? The market's now adjusting to what? All the COVID shots that are being given, all the centers that are getting their doses. We're going into the post-COVID period. Now, I know the doctors are going to say, and they're right, we're not there. But that's not how the markets work. The markets look over the horizon. So the shift has already begun in many areas out of those stocks that were the high flyers during this and rotating into ones that I think do better in a COVID or a relatively better phase. That puts the selling pressure on the high ones, puts money back in the low ones. I don't see people going to cash. I don't think 1.5% is going to draw them to that. It's where's the next hot thing. And that's how people seem to be investing. I'm not talking the millennials. I'm talking funds. I'm talking even the conservatives. They realize there's a shift. It is a watershed event. It is not temporary. Even if they get more strains of COVID, it would have to prove that we don't have vaccines to fight it. At the same time, the vaccine manufacturers are saying they're rolling out ones to just, in fact, do that. New variants, all that, they're addressing them. You got to go with the flow. That's the point of what's happening, and that's what you're seeing behind me. So as you're down in the market 2% this week for the S&P, so what? We made a trade top. Okay, I can live with that the market up here at this close of 39.31, and we're back down right now to 38.34, approximately 107 points lower, is in a corrective mode. Okay, it's not a bear mode. It's a corrective mode. You're not trading underneath the 18-week average of closes. When I come to the day charts, I have said repeatedly in my morning subscriber video and my writings in here, the market's acting heavy. I pointed out that when you were coming out just the other day, I said, this is going to be a resistance area. You tell me what it turned out to be. Okay? That's not to say the market has made a top and we're going back down here. You don't hear me saying that. I am not saying that. Markets come to pauses, ends, they do different things. And right now, this market has what? It is in a short-term downtrend. You have lower highs, you have lower lows, you're under the 18-day average. If it wanted to just completely see out, you know what the other three letters are, 36.56 might be where the market goes. But more likely, a Bollinger Band is something I'd be looking at, and that number's right here, 38.10. You got to 38.05 tonight. first time you hit it, and you're already off of hitting that 16 handles higher. So the market's hitting its downside target. At the same time, in the momentum, you're getting into an area that's oversold instantly. Anything reading under 30 is oversold. So I see the pros covering shorts right here, right now. Oversold there. I don't see them putting out new shorts just yet if you rally, and the reason is you're oversold. When we get over to the NASDAQ, I had thought that that was happening back here. You had a rally, and this is today. Okay? Tried to get up to that 18-day average where I think the pros might have looked at the market. Here's how you came in. You were not in oversold territory. That's why I think they might have looked to get short if you just went up there. Well, with the break, now you're in oversold territory, and will you stay under the Bollinger Band? The odds don't favor it. Right now, you've got one full session where you closed under it. We'll see if you do it again. The market should struggle to try to get back to the 12,793, 94 level, the lower Bollinger Band, and it's oversold. Do I think you're going to get new money saying, oh, I'm going short, we're going down? I don't think so. That doesn't mean I'm right, but I don't think so. If it does, 12,508 is the next zone. Is there any reason to be long? None, but there's plenty of reason to be covering shorts from my perspective. In the Dow, you lost the embedded reading. This is how you looked coming in. I had written in my report, I think it was yesterday and the day before, I said, the Dow is the only one hanging in here. Can it support what these other markets do? If they let go, how does it stay up? It was just rhetoric, a thought. I didn't see this coming today, okay, but it came. Means where's the first support? 18-day average of closes. You hear me say that if you're a regular viewer all the time. Markets like to go to neutral numbers. They don't have to stay there very long, but they like to come back to them. They like to come back to them from rallies. Go in, open your own chart, and look at it. If you don't buy into the theory, terrific. I believe in it. And this is where you're at tonight, still fighting at that number. But the big story is you have a number that's come down, you got a lower low, higher high. The swing line has not been trending, and now you lost the embedded reading, and it's not going to be gained back, in my opinion. Could it? Yes, but it would take something I've never seen from a 50 level in the same day to re-embed both numbers. It could happen, I imagine, on a mathematical basis. I've just never seen it happen. In the Russell, couldn't make it back to the upper Bollinger Band. Momentum has been pointing down. Once you lost the embedded reading, I kept telling you, I think you're going to go to this number, that 18, and try to figure out what next. And the market tried today to lift itself, and you had a miserable failure, and it's following through tonight, but without a trend. You've got a lower low, higher high, and you're staying away from both sides of the Bollinger Bands temporarily. VIX cash, what is the trend? It's been up. The market's been fighting, as we thought, right here a battle at these moving averages. If it rallies, I'll close my eyes. Look at the Bollinger Band. Where did it go? Where's the battleground? You finished 28.89 above it. That number's 28.17. It can stay over a day or two, but it doesn't stay over it very long. That is the point that I'm making, okay? But it's screaming at you that now, finally, the markets recognize something. During the previous rallies, you kept dropping, and the breaks, you didn't break very much. You still haven't broken very much. Have I pointed that out regularly? Then we get to the bonds, which I'm a little bothered tonight. You're flirting here with this market trying to lose a bearish embedded reading. This might be, you might be at that spot where the pros start covering tonight. If you walk in and you're into the 20s, I think they're doing it right here. We'll see if I'm right or wrong. I have no reason to be bullish. This is called the Gorilla Glue trade. It's hard to figure out when it's going to end. It ends when you lose the embedded reading typically. Can you lose it and gain it right back? One day you can. That's about it. We'll see if it does that. Is this a spot to be adding new shorts from my perspective? No. 10-year note. This is stronger on the downtrend than the other, but it just joined into the big parade. Today was a monster day. You know, tomorrow you're going to see in the news, turn on in the mornings like I do, 3:30 in the morning. It's going to be about interest rates around the world. I don't even know the news they're going to say at 3, but I can tell you the news they're going to do. And you have to watch these to understand what's going to happen. It's going to be about interest rates and how the market is getting back to a different norm. That is what I think you're going to be the theme with. In the dollar, you went down today, cracked into the lower band, trend down and oversold. What in unison do you think I think the pros were doing? Again, covering shorts. You're not embedded. Now you're back up here. It's a broken record, and you're not anywhere near embedded. You're just in a trading range that's found a band of support for the meantime. What about the euro? Let's go back. Here you are with a market, and this arrow is actually not pointing up. I'm pointing up because I had to put it on for today. If you rally, I'll look for the first challenge of the Bollinger Band to be a failure zone because you're not embedded. Market got there, and this is what you're doing tonight. So we do this nightly. I don't predict the market's going to go there. I'm telling you, I am predicting when it hits that number, it's going to have trouble. Why? Because you can go back and replicate this yourself. My job is to be your guide through that. British pound, time for the correction. Okay, it's here. So on this leg, you're not going to the 150, but that's not what the leg's about. The leg's about the weekly charts. That could easily go to the 150 levels before this is done. Markets don't grow to the sky. Prices pull back for whatever reason. You lost the embedded reading today on the close, right? That often leads to price making a run at the 18-day average of closes. That would be very much in the keeping that I have. You've lost that reading. You didn't gain it back when we reopened. Boom. I wouldn't be surprised to see that. But if I lost my overall bullishness, I want to go on record. I have not lost that. So if you'll do me one favor, it's not much to ask. If you like these comments that I do, if you like these updates, give me a click on YouTube, write me a comment. I'd love to hear it. A lot of you write me hate comments. I'm not that bad a guy. And I will talk to you all tomorrow. Take care.